was going to talk about crypto AI. I did that about 10 days ago. But we already had this great fireside chat from Vitalik and Ilya, and then Marya gave us a lovely overview too. So happen to be talking about something else that's pretty timely. At least it is on my Farcaster X feed on Retro Public Goods. And I'm gonna present two mechanisms, and I'm gonna try to unite them under this concept of retrofuturism as a way of sort of like giving you like a through line. So bit of a funny start to a research talk, but retrofuturism is like a design thing. And if futurism is about sort of like predicting the future and anticipating the future, something maybe we're all familiar with here, retrofuturism is remembering that anticipation. So kind of going back in time and thinking like, oh, the Jetsons imagined our future or something like that. And I'm going to say that in the retro public goods context, I think this approach of remembering the anticipation has unique value in terms of expanding the ecosystem and furthering some of the institutions that can help push it. So retro public goods, why is it interesting, especially recently, right? We just had this announcement from Optimism of $400 million in retro public goods funding for the rest of the year. To date, I think there's been 300 or so million given out in ecosystem grants, most of that from Optimism as well. But you have Arbitrum, Solana, Near, a lot of great projects who have done experiments or are doing experiments in the space. And there's a lot of reasons for it. I mean, just generally, I think it's an exciting idea and something that is fairly unique to crypto because you might be able to leverage certain aspects of commitment. But also, many of us were around for this sort of grant funding bonanza nightmare of 2021, where you had these kind of mercenary groups going around farming different grants and, at best, doing the letter of the law to sort of make this money. And you can see RPGF as something like an alternative to that, right? Where you're requiring something to be built up front that's useful before the funding comes in. So I think that's one of the reasons you're seeing excitement around it. That said, it's a new idea and you have some problems around it. One of them is you're just always going to have a lack of supporting institutions when something's new. So one of the things I'm going to talk about is maybe how we can further those. And secondly, there's just going to be mission creep around the people carrying it out because it's a fairly new idea and maybe hard to get your mind around or not everybody's fully bought in. And so if we're going to talk about mission creep, and I'm going to term it futurism creep since we're doing the theme. I'm not trying to meme retrofuturism. I really just that we're going to do that as thematic. Might as well define the mission. Many of you probably know it, right? But retro public goods, so we have two parts of it. Retro means it's easier to understand it after it's been built than it is before. And then public good, excludable, blah, blah, blah. We've all read that stuff. But essentially, it's just some lack of market power. That's the easiest way to sort of think of what a public good is. And so retro public good has both of these qualities. Examples that cleave this, classic example is like the Henry Ford quote of, if I'd asked people what they wanted, they would have said, I want a faster horse. Instead, he built a car. So cars are sort of a retro beneficial good, right? In that people don't know they want it, but then after you make it, they're like, oh yeah, cars are pretty good. Not really a public good though here because the market power for cars was pretty good. Last I checked, at least Ford was doing all right for a while, right? So it turned out that even though it was a retro good, it wasn't a public good, but there were also public goods. Famous example is fireworks. You have fireworks in the middle of the city, people off in the hills can see them, right? So it's not excludable, not rivalrous, right? It's sort of enjoyable by everybody, but it's not really retro. You can tell people, hey, I'm going to light fireworks on, the New Year's, and people kind of know what you're talking about, and they go, yeah, I could pay for that up front. So fundable by more traditional mechanisms, maybe quadratic funding or pick your favorite, right? Combining the two, right, where it's both retro and public goods, that's the intersection where you find RPGF and where we're ideally trying to find. So I mentioned there are two problems. Let's start with one, the mission creep, futurism creep, since we just defined the mission. Maybe we can now talk about how it can sort of creep and go wrong. So one of the problems you'll face if you sit inside these rounds is you'll notice people go, well, look, I mean, these things are already built. And meanwhile, there's all these other teams promising to build some things for us next year. Why don't we give them the money instead? Pretty reasonable thing to think, right? At the same time, if you do that, you're essentially not doing retro public goods funding. The essence of it is you're trying to commit to funding things that have been built for you in the past. So if you then go, yeah, but you already kind of built that stuff, so I'm not really going to give you the money anymore. I'm going to give you the stuff I'm going to give people the things for what they're promising to do in the future. You're just doing kind of a vanilla grants program. So this is something that's debated inside Telegram groups and on Twitter and so on. And so I'm not really going to try to litigate this exactly. I'm not going to really go through this. There's reasons you might want to try to keep it pure. Screenshot it if you want. Happy to talk about it. But essentially, the idea is just, if you think it's interesting to experiment with retro public goods funding, it's probably worth just trying to do retro public goods funding, which is not let it slip into a vanilla grants program, at least if we think it might be doing something interesting for us. So how might you do this? And now we'll get into something a little more researchy, right? A little more mechanistic. So you can think of this as you imagine this curve of two types of businesses, right? Or I'm sorry, one type of business, but it's before and after. On the x-axis, we have this perceived utility. And on the y-axis, we're going to just think of these as votes or attestations or something, right? And then imagine you show up with your proposed business and you say, hey, everybody, what do you think of my idea? And it looks like this orange curve, right? Basically, a whole bunch of the people don't think it's such a hot idea. They don't understand the utility. But then you go ahead and make it. And then you show everybody and you say, hey, what did you think? What do you think I made this thing? I built this bridge. And now it looks a little closer to a blue curve, right? Where out there on the right tail, you have this like higher perceived utility. They now understand, oh yeah, that was a pretty good idea. This difference seems to capture something interesting about what we mean when we're interested in retro public goods, right? Something that looks like orange when you tell people about the idea and looks like blue once you've actually made it. And so exploiting this difference might be interesting. Turns out we kind of have this data, and I say kind of, I'm going to italicize that, but in an interesting enough way to run it. We have ecosystem grants where people will show up to Gitcoin rounds, for instance, and they'll say, hey, here's what I'm going to build. And then you can see how many people seem interested in donating. And then some of those same orgs will then apply for RPGF rounds. So they get to show themselves in the sort of orange curve phase, and they get to show themselves in the sort of blue curve phase. And it might be interesting to exploit this difference, because if we think the difference between these curves is telling us, hey, this really is an RPGF org, is something that looked like this and now looks like this, maybe we can identify it. So do we have any measure theorists in the crowd? Okay. My notes actually said hold for applause here, so I thought I was really expecting a lot of measure theorists. Okay, there we go. Okay, cool. Yeah, well, anyway, if you're the measure theorist or the burgeoning measure theorist, you're probably licking your lips, right? Like I said, surprise. Now you're seeing these two integrands, right, and the difference between them, and you're like, oh, okay, I don't know, like KL divergence or like Hellinger distance or probably some non-parametric thing I've never heard of. But I think as I started to do the data work, and I'm not a measure theorist anyway, I just decided to sort of left curve this and do log odds to run the data. Happy to talk about the reasons why, but we didn't actually wind up having measure theorists, so I don't know that I have to explain myself to you. But come harass me after if you want to know why not KL yet. Maybe eventually, though. So if you left curve it and you just try to figure out what's the difference between these two curves, using log odds, which that's the functional form here, just literally we're dividing RPGF attestations by Gitcoin, quote unquote attestations, and you're taking the log because these are small values, you get a score. And you get a score that we might call the sort of like surprisingly useful score. And when you run the numbers, which hat tip Carl Servone, who runs a really great GitHub repo for this data, which I was able to pull, and with my partner Lauren, we basically just ran through this and said, what are the most surprisingly useful orgs? And this is just what the data says. I don't know. They seem pretty good, but I mean, I'm not an expert. You can sort of use your judgment, but that's what seems to be a useful org from the perspective of they applied for a Gitcoin round at one point and didn't get a lot of funding, and then proportionally got much more RPGF funding after they'd presumably built something. So you can think of this again as being, since we're doing this retro-futurism theme, right? I said it's remembering the anticipation, right? And you can see how what that mechanism is doing, going back here, is going to the anticipation, right? The Gitcoin piece, the part when we hadn't built it yet, and we're saying, what did people think then? And now we're applying it to what they think now. And so that's the essence of that mechanism. And that's why it's retro-futurist, shall we say. All right. So now we have a second problem which I raised that we're going to still fly under this retro-futurism banner. And that's how you can support capital-intensive projects. Now, earlier I technically said, supporting institutions. But, and that's what I mean here still too, but I'm really trying to identify a specific problem, which is the question of how you bridge something from 0 to 1 if you're not going to give it funding up front, right? Because we have this, they showed up to a Gitcoin round and they didn't make any money, and yet they built it anyway. How did they do that? And Stephen Goldfeder on Twitter has been really good. This is not from 2 hours ago. This is actually from 26 hours ago. I made these slides yesterday, but thank you, Erica and June, for being flexible and letting me update my slides at the last minute. But But essentially, Stephen's making this point. If you read it, pretty tough to go to people and say, hey, figure out how to make this thing. And then once you've made it, I'm going to give you some money, right? And even though I think RPGF is a really great idea and really promising kind of novel, that's first of all just a tough ask. And second of all, that's going to be a pretty large filter you're putting on projects, especially ones that require capital. And, a lot of these projects require capital. We need good talent in the space to build interesting things. And that talent has opportunity costs, and you often need to pay them some money. So figuring out how to get them some money up front can be useful, especially challenging if we think one of the most interesting things about a business is going to be that it didn't get a lot of broad-based money up front, which is what we talked about in the last mechanism, right? So one thing I just want to call your attention to, going back a little bit, is when we talk about Gitcoin and when I'm talking about these like early grant funding mechanisms, I'm thinking of them as very broad-based. Right. So I'm thinking of them as we're asking a lot of people, a whole room full of people, how useful are these things? And on average, they don't get it. The Henry Ford idea, right, of like, you tell everybody that you're going to make a car and they don't sort of understand. But that doesn't mean that there aren't specialists who could sort of understand what a car is going to do or how important it would be. So there still can be specialist funding. It's just going to be hard to leverage these kind of cool, broad-based grant funding apparatuses that we have in the space. So what's a form of specialist funding? Well, look, I mean, VC is what it says on my paycheck, So like there we have VCs in the space. You probably have heard that some capital goes around in these spaces. And so you might go, well, hey, what if VCs funded this? But VC funding is controversial for RPGF. I've highlighted some tweets. Maybe a few of you are in this room, actually. I think maybe at least, okay. Hopefully I've represented you well. But at any rate, I think it's controversial for a good reason. There are good arguments on both sides. Again, I'm not going to try to litigate this. This is something that a lot of smart people are considering and discussing, and I'm participating as a badge holder. But there are good reasons why people are a little gun shy about having VC-funded orgs get RPGF funding. And I'm going to give you one reason why, which is my own. I'm going to call this the sort of Chrysler building problem. So the Chrysler building, I love this building. I loved it when I saw a picture of it as a kid. When I finally, got to New York, like a couple decades later or something, I loved it when I saw it. I think it's a cool looking building. I dig it. If you said, hey, it turns out we did the math, and Chrysler, for all the aesthetic benefit and joy that the Chrysler building has captured, they actually never really recovered that. They never internalized that value. Chrysler didn't, right? For whatever reason, as long as they owned it or something like that, or the brand value or the number of people who bought Chryslers because of the name, it's just not high enough. They spent too much money or it cost them too much reputation. Maybe that's true. I mean, this thing has brought a lot of joy, right? At least it did to me, so I'm sort of extrapolating here. At any rate, do you want an RPGF round for a Chrysler building? It is a public good, and it's maybe a retro public good. It was controversial at the time, a little like the Eiffel Tower, where like when it was first built, people were like, what is this stupid thing? Now after, I think a lot of people love it, and it's considered one of these sort of great buildings that we always love to see if you come to New York. And let's just assume that Chrysler didn't capture the value. Well, doesn't that kind of fit our frame of what a retro public good is? And doesn't that seem kind of, I don't know, that doesn't seem super interesting to have a retro PGF round for Chrysler. So that to me captures the flavor of what the problem is with the VC funding. And so when I said like a public good is something that lacks market power, I'm going to modify that to say a public good is something that lacks expected market power, or at least in this case. And I think to me, that's what's really the difference about why the Chrysler RPGF round is wrong, and why maybe some types of VC funded orgs shouldn't get it, is because Chrysler did this. They had to show up and justify this to people who, were shareholders, right? And in expectation, it was probably profit seeking. Retrospectively, it wasn't, but in expectation, it was. And so if we just compensate that after the fact because it failed, we're just de-risking their investments. And then what we're not doing is we're not capturing the upside where they took a Chrysler building size bet and it paid off. And so that just doesn't seem like a super exciting thing to do. And so what's an alternative to this? This is Retro-Futurism supply side edition. So we talked about the anticipation of the people we're asking about the good. Now let's talk about the anticipation of the people building the good, the investors, the people showing up, the early employees maybe, right? And what we want to do is we want to prevent this de-risking. And maybe we want to prevent adverse selection too. We want to prevent businesses that thought they were going to make a bunch of money showing up with their hands out because they didn't, and now saying, no, I was a public good all along. And so we're going to ask them to make this commitment up front. to say, you know what, I don't think I'm going to have the market power to capture this value. Instead, the only route for profit for me is going to be retro funding. And so capturing that expectation will require them to credibly commit to that, right? And so one way to have them credibly commit is to say, you should change your organizational structure. You should be a retro profit organization, sort of like being a nonprofit, but with a little bit extra, right? So same as a nonprofit commits up front and says, hey, I'm not going to take any profit because I think I'm building the sort of business that isn't going to be able to achieve it or be a normally profitable business. A retro profit organization does the same, but with retro profit. So you recycle all the normal operating profits into the business, but with one little wrinkle. And the wrinkle is retro funding rounds, or things that we consider retro funding, that stuff can be considered profit. That could be paid back to early investors, to employees, to shareholders, to stockholders. It unlocks a little bit of that equity, but it also gives you this commitment up front, because they're basically saying, if it turned out suddenly that I had a car on my hands, right, in the Henry Ford sense, I have now structured my business so like it's very hard for me to capture that profit. So it's a costly commitment. And as we saw from the OpenAI side, just these structural from the OpenAI history, right, where we had to like change the structure of this organization from a nonprofit or change its mission to some extent, it was pretty difficult to do that. It took some pretty powerful people trying pretty hard to change it. So these can be pretty binding commitments. Also, it's probably just worth saying, given that I'm talking about commitment and we're here mostly talking about these sort of decentralized commitment devices we call blockchains, you could try to imagine some fancy mechanism design where we're not going the legal route. And probably something to be said for that. The reason I'm going to say the legal is maybe interesting here is the problem we're identifying is a lack of capital up front. They don't have capital. So then you're like, okay, well, they should pledge some of their capital and get it slashed if they decide to take profits. Yeah, but they don't have capital is the problem we're solving. So that's where some of the sort of like more incentive design mechanisms you might think of could go wrong. So instead, maybe you have a legal org structure, maybe some of the exciting network state things we have going on, maybe you could organize under that. I don't know. That seems promising and interesting to me. So what would the retro profit organization journey look like, right? You would start off applying for some sort of this is the econ jargon, you'd call it like ex-ante funding or upfront funding, but something like a Gitcoin round where we were soliciting a lot of people's opinions about what you were going to be able to do, right? And then you would register as a retro profit organization before or after, right? And what that's giving us is this pre-commitment that you think you're not going to be able to achieve enough market power to do something profitable, right? And then you might apply for this bonus RPGF round. And that journey gets you a couple of things, right? First of all, applying for the Gitcoin round gives you the opportunity to get some capital up front, because maybe it turns out you don't think you're going to be able to convince people that your car is good and they're all going to think you have horses, but then you show up to your Gitcoin round and it turns out people get it. Great. You just learned that you're traditionally grant fundable, right? And so that's a good exit. And now we have people who are grant fundable, and you can go do that. Secondly, this retro profit organization, what does it give us? As I said, it gives you this upfront commitment that you know the sort of org you're going to be. And so you're not a failed business sort of coming out with your hand out. And what that does, not just on the commitment side, even though I'm saying like we're trying to avoid these orgs showing up with their hand out, the people who have to vote on and decide these RPGF rounds have a lot of businesses to look through, right? They have to review, let's say, 600 applicants more if they weren't gated. It feels a little bit like a free option. So why wouldn't a business come up and say, yeah, sure, pay me for the Chrysler building and pay me for something else? This credible commitment sort of creates a separating equilibrium where what voters could do is they could say, okay, well, you didn't make a commitment up front, so I'm not going to spend as much time looking on you. So it reduces the sort of computational or at least like labor overhead on the voting side as well. And then third, as you're applying for this bonus to RPGF round, now the voters don't have to like look at every single business. They can focus on you. That gets you a little more attention probably. And then if it turns out that you weren't Gitcoin fundable or upfront fundable, maybe you were able to find specialist funding. Maybe you were able to convince early employees or something like that this equity share could be paid for via retro profit or via retro profit funds. And if that happens, then you can do that, and incentives are sort of aligned over time, right? One word on this bonus thing before I finish. I think I only have one slide left. It's just, I talk about this as a bonus. There's a lot of ways to use that gadget. I just do bonus because right now I think there's that futurism slippage where people are trying to do RPGF, but they're rewarding things in the future. And the reason you do it as a bonus right now is to sort of accommodate that. But there's a lot of different things you could do with the mechanism. Okay, so lastly, we always have to close on the depressing note. It's the classic, like, what are the challenges? What are the things we could do next, right? So first, look, is it venture investable? In theory, yes. I mean, right? Like, in theory, if you're creating this amount of value, the people who that value is created for could redirect it back to you, right? If that happens to be unicorn-sized value, yeah, in principle, it could be directed. In practice, I think it's pretty reasonable to say we're a long way away from that. And even some of the trends you're seeing in RPGF, where people seem to be particularly excited about how many orgs got funding, is kind of pushing in the wrong direction here, where you really might want to see a really huge, impactful thing get a lot of money. And so you might want the distribution to not be so flat. That said, probably just something to be experimented with. And again, the fact that it's in theory possible means that you don't want to rule it out. And when I say venture investable, I mean it under this sort of like classical unicorn-sized fat tail returns sort of thesis, right? There might be other models or other theses that could support it, and hopefully there are. Secondly, we have this how gameable. The secret measure theorists, maybe there's some secret game theorists as well. And you saw this mechanism where I have Gitcoin and optimism, and it's kind of a partial equilibrium at best. It's certainly not a general equilibrium theory, right? And you might imagine, okay, well, let's say if it turns out RPGF funding is, this big and Gitcoin funding is this big, you might make yourself look worse for Gitcoin funding to expand the RPGF funding. But then if you think about that for a second, you're kind of like, okay, yeah, but that reduces my likelihood to succeed. Anyway, if you start down that path, you realize that, the actual incentive design for connecting them, it might be a little more complicated than what I've suggested. I think the gadget essentially works, but I haven't done all the work. So I think there's something interesting to do there. And then lastly, this is the fun part, I think. Could you actually slash retro public harms? This, I said I'm not memeing retrofuturism, but I am still trying to meme retro public harms because I think they're interesting. The idea that you have people, pledge something up front, they commit just generally because you don't know what they're going to do. And then if you recognize the harm afterward, you slash it. It's sort of the evil twin of retro public goods. And if you wanted to use those fancy measure theoretic things I was referencing before, you'd actually probably need to do this. You'd need to find a business that, let's say, you thought was going to do a really great job and have them, stake some of their grant. And then if they didn't do a great job, you'd have to slash them. Like, the theorist in me really likes that. As a practitioner and actually imagining trying to slash somebody's business, it doesn't sound super cool. So that's one of those questions that I would say is sort of TBD, theoretically interesting. All right, so this is the tell them what you told them slide. I give you two different mechanisms, so I think it's fair to me. It's only fair if I just sort of reiterate the thematic component, right? The thematic component is the retrofuturism, the fact that we are remembering that we have to look back at the anticipation of the future. And so that's what unites these as a way to sort of expand the RPGF grant system and provide structures, right? First, what we saw is remembering the anticipation on the demand side, remembering what people thought of the project you were going to build. And if they didn't think it was good and then they changed their mind, we think that's a pretty strong signal that it's like a retro public good. It's almost the definition of it, right? And then the second one is remembering the anticipation from the builder side, from the early employee, from the investor side, and making sure that maybe up front they thought it was a public good in expectation. So we prevent that adverse selection and we prevent that sort of de-risking of investment that you could otherwise see. And so I'm I'm excited and enthused about this approach, and I'm excited to support it however possible. So if anybody's especially interested in it, definitely would look forward to chat further and appreciate the time. Thank you all, and talk to you soon.